Trading can give you this, and this, but only when you have a clear understanding of what you're doing. Once you've mastered the basics, spending just a few hours a day trading can earn you an income comparable to an average salary of a regular job. I'm Pete, Educational Specialist at EA Automatic, and I've made this video to give you everything you need to start. No expensive courses, no useless info, just a concentrated experience. And in this video, I'll cover all the Forex basics, explaining the two main types of market analytics and talk about how automated trading can generate passive income. All that so you can enjoy the same results as our closed community members. So watch the video till the end. I believe that learning the basics of trading through practice is much faster and more productive. So how about a system that can help you master the fundamentals without the pain and mistakes of manual trading, getting you straight to real results? That's EA Automatic. It's a complete solution that automates your trades with a suite of smart trading robots built on advanced proven strategies, and an AI that learns and improves every day. That means you get the speed and precision needed to catch opportunities that manual trading can't match. It takes the guesswork out of trading, letting you build a profit safety net right from the start. Let's take a random week in February 2025, say from the 10th to the 17th. During that week alone, our system generated nearly 10K in completely passive income. Now, if you think that's impressive, you'll be glad to know you can try our system for free while you're still learning. Right now, follow the link in the description to our Telegram channel and send us a message with the word robot, and we'll set you up on the same day. If you would prefer a more personal introduction, you can also book a call with us. Start automating your trades today and build a safety stream of passive income. Follow the link in the description. We're ready to help you get started. Okay, back to the basics. Let's start with the definition of Forex. What is Forex? Forex is the global market where currencies are exchanged. Trillions of dollars change hands every day, and it runs 24 hours a day, 5 days a week. That means you can enter or exit a trade almost any time without worrying about the size of your order. Unlike crypto, which can be wild and unpredictable, Forex moves huge amounts of money and is less prone to sudden manipulation. That makes it a more solid place to build a trading foundation. Now let's talk about some key terms. First, currency pairs. In Forex, you always trade two currencies together, for example, Euro and USD. The first part is called the base currency, here the Euro. And the second is the quote currency, here the USD. If Euro USD is 1.08538, that means 1 euro equals 1.08538 US dollars. Now let's look at how currency prices work. Let's look at how they're quoted. Every pair shows two prices, the ask and the bid. The ask is what you pay to buy the base currency, while the bid is what you receive when you sell it. The gap between them, known as the spread, is essentially the broker's fee. When you buy at the ask and sell at the bid, the difference, or the spread, is what the broker earns for facilitating your trade. When you trade, you're not actually buying the physical currency, you're buying a contract on any given currency's price movement. And that contract is measured in lots. The standard lot is 1.0, usually representing $100,000. For beginners, it's often smarter to use micro lots, like 0.1 or 0.05 to keep risks low. Usually, you assume by default you buy a currency and it means that you're expecting its growth, and that's called long. Alternatively, you may expect its fall, and that's called short. So if you buy long, you profit when your asset grows. If you buy short, you profit if the asset falls. Then there's the pip. A pip is the smallest price movement in a currency pair. For example, if Euro USD goes from 1.08538 to 1.08548, that's 0.00010 change is 1 pip. Pips help you measure small moves in the market, and they become important when you set the targets and stop losses. We also need to understand leverage. Leverage allows you to control a large amount of money with a small deposit. For example, with 120 leverage, every dollar you put in lets you control $20. But be cautious. While leverage can amplify your gains, it can also magnify your losses if the market moves against you. Let's say you have $100 in your account and you're using 120 leverage. That means you're controlling a $2,000 position. The price of the asset goes up by 5%, you make a $100 profit, doubling your investment. On the other hand, if the price goes down by 5%, your loss will be $100, which means you'll lose your initial investment. So while the leverage can help you make more money, it is important to use it wisely and manage the risk. Let's talk about margin. Margin is the money you put up as collateral to open a trade. It's like a security deposit for your position. Your broker uses margin to protect both you and themselves if the trade goes wrong. If your losses get too high compared to your margin, the broker might issue a margin call, which means you need to add more funds or your position will be closed automatically. Now that we've answered the basic terms, let's look at how orders work. When trading, use different types of orders to enter or exit a trade. A market order executes your trade immediately at the current price. A limit order sets a specific price of which you want to buy or sell, and your trade will only execute when the market reaches that price. Once you've opened a trade, you have two key tools to manage it. A take profit limit order is set at the price when you want to lock in your gains. When the market reaches your target, your trade closes automatically, securing your profit. A stop loss limit order, on the other hand, is designed to protect you if the market moves against you and hits your predetermined price. The trade closes automatically, limiting your losses. Together, these orders help you manage risk and ensure that your trades are executed by the way you want them to be. Once you have these basics down, you can actually make your first trade. There are two main ways to trade: manual trading and automated trading. With manual trading, you're in charge of every decision. Most traders use technical analysis, studying charts, drawing support and restrictive lines, and using indicators like RSI, Fibonacci, and the stochastic oscillator, and many more to predict where prices might go. You can also use fundamental analysis, which involves looking at new economic data and other real-world events. However, technical analysis is often easier for beginners because it's more visual and straightforward. I've linked some of the videos on technical analysis strategies in the description, definitely worth a watch. Manual trading gives you full control, but it also puts your emotions in the driver's seat. Fear and greed can lead to bad decisions, and even experienced traders struggle with that. That's where automated trading comes in. With automated trading, you hand over the decision making to a computer program, a bot, that follows a set strategy. At EA Automatic, we build algorithms that work in real time, reacting to market changes without getting caught up in emotions. This means your trading stays consistent even when the market gets volatile. It's like having a partner who never panics and always sticks to the plan. Our approach at EA Automatic combines solid technical strategies with smart risk management. Whether you trade manually or you let the bot handle the details, the goal is to make clear, objective decisions that lead to steady results. We want you to build a reliable trading foundation instead of just gambling with your money. So link, as always, is in the description. Send us a message or book a call. We'll connect you to the system the same day. And now I'd like to talk to you about brokers and why having the right Forex broker by your side can make a world of difference. We'll talk about what exactly a broker does and why it's important to choose the right one that's properly regulated, especially when you're serious about protecting your investment. The broker's role in Forex. Well, think of your broker as a bridge connecting you to the global currency markets. They provide the platform and the tools you need to buy and sell currencies, so you don't have to figure it all out on your own. By handling order execution and giving you access to real-time price data, a broker helps you turn market opportunities into actual trades. Without that professional link, diving into Forex would be a lot more complicated. Why a regulated broker matters. When a broker is regulated, they have to follow laws designed to protect both your money and your overall trading experience. Regulation typically means that they must keep enough capital on hand, maintain separate accounts for clients' funds, and meet standards for honest reporting. This framework significantly reduces the risk of shady practices or sudden shutdowns, giving you greater peace of mind. Another major benefit of working with regulated brokers is transparency. You can clearly see where your money is going and how your trades are being handled. In this fast-paced world of Forex, knowing that your broker is playing by the rules and can maintain steady operations under various market conditions is essential. At EA Automatic, we only team up with trusted brokers who meet these regulatory standards. We don't want you stressing about whether your funds are safe, so we make sure to work with partners who've been proven themselves reliable. That means you get quick withdrawals and a trading environment you can really count on. To get to the next stage of our educational program, we invite you to complete a quick interactive task. Open an account with one of our trusted broker partners. Simply follow the link in the description to get your personalized registration link. Once you've registered, send a message to our manager who will guide you through the next steps. That's our full rundown of the basics, from understanding Forex, currency pairs, pips, lots, leverage, and margin, to how orders work and the difference between manual and automated trading. Now let's see how well you've been listening. Click the link in the description to take a quick quiz to see if you picked up everything we've covered so far. Once you pass, you'll be automatically granted access to the next stage of the educational program. And if you're ready to simplify your trading even further, check out our trading system. It takes the guesswork out of trading so you can focus on watching your balance grow without the stress. Thanks for sticking with me, and let's keep building your trading skills step by step. I'll see you next time.